Welcome to the session, guys. As we know, anyone studying finance must have realized that only your degree cannot help you master it. You would eventually have to rely on finding interesting way to gain knowledge in the same. So the BFM committee is here to save you from the monotonous routine and spice up things with various events that we have planned, curated, and put together for you. The sole aim of BFM committee is to spread financial literacy by bringing forward a new perspective of learning, growing, and developing together. In your journey of learning finance, we hope to be the last and the most important piece of the jigsaw puzzle and complete what's been missing. Over to you, Riz. Riz, you are on mute.
Sorry. Taking inspiration from the slogan of Global Money Week, Learn, Save and Earn, the BFM Committee of HR College of Commerce and Economics present to you our own Money Week. This Money Week brings to you 7 days filled with talks, discussions from institutions like NSE, BSE, CDSL, and other industry leaders. There are competition to test and apply the knowledge that you have gained from these discussions. This week can change your perspective about finance and make it easy for you to grasp different concepts and to be more financially aware. It will also help you to make financial sound decisions and ultimately achieve financial well-being and financial resilience. Whether you're a finance student or not, all of us have something to gain and learn here. Now, I would like our co-partners, Krishna Foundation, to introduce themselves.
Thank you, Bridge. Krishna Foundation is a non-profit NGO in India headquartered in Mumbai, registered under the Maharashtra Public Trust Act 2016. Krishna Foundation works in diverse areas in the social field related to women empowerment, child education, mental health, financial literacy, investor education, tree plantation, water conservation, upliftment of the poor and needy, etc. Krishna Foundation is empaneled with the Ministry of Women and Child Development to conduct training on the prevention of sexual harassment at the workplace. It has also signed MOU with the Government of Maharashtra to conduct an investor awareness program in the Palghar district and received appreciation letters for the work done from the government for conducting various financial literacy seminars in the remote areas of Maharashtra. Krishna Foundation champions a course of investor education and has conducted numerous investor awareness programs and financial literacy programs for college students, defense, corporates, women groups, etc. Krishna Foundation is delighted to associate with HR College to celebrate the Global Money Week. We look forward to engaging in many more programs in the future. Thank you.
Now, I would like our teacher in charge, Ms. Shweta ma'am, to introduce our Vice Principal, Dr. Naveen Punjabi.
Thank you, Rich. Good morning, everyone, and welcome. I first of all like to welcome our guest speaker, Yogesh ji, our speaker, Sanjay ji, and our Vice Principal, Dr. Naveen Punjabi, and our dear students for the Global Money Week celebration. It gives me a great opportunity to introduce our Vice Principal, Dr. Naveen Punjabi, who is a PhD in Strategic Management, UGC NET and JRF. He has 4 years of experience as a wealth manager in Kotak Securities and DBS Bank. Sir has 9 years of experience as a professor and a director of placement. Naveen sir has authored books on wealth management and risk management in the courses of BMS, BBI, and BAF. He's visited and delivered lectures at leading universities like Stanford, NYU, Cornell, UC Berkeley University. He's recipient of Outstanding Young Faculty Award from HEP, and he's also been a resource person with SEBI. Sir, now I would like you to introduce our guest speaker, Shri Yogesh ji, for the session. Thank you, sir.
Thank you, Professor Shweta, for the kind introduction. Respected guest, and that's my daughter behind me. She wants to know what's going on. Great. So respected guest, Yogesh ji and Sanjay ji, thank you so much. I must say that they were just a phone call away when we made a phone call to them saying that, sir, we are planning to celebrate the Global Money Week. And Yogesh ji was like, tell me the date and we will block that date. So I must say that they are very forthcoming and we really appreciate that forthcoming nature of yours. Thank you so much for accepting our invitation. Secondly, I would like to thank our principal, who was very empowering. She gave us full autonomy. Dr. Pooja Ramchandrani, she just said that, go ahead and celebrate it in your own way. last but not the least, Professor Shweta and the entire team of BFM committee, which has worked very hard, and of course our partners, Krishna Foundation, who did this wonderful job. So why did we decide to celebrate this week? So personally, having worked in the financial markets, we thought that money management is a life skill. And as before the event we were discussing, Yogesh ji said that I'm still learning. So I think I completely endorse your thoughts, sir, because we all are still learning. Even though we become faculty members, it is more that we learn from the participants. And as very rightly said, that 335 plus participants who have joined in today are going to teach us something more. Of course, the resource persons are very knowledgeable and enriched, but the learning that will come from the participants and the questions that they will ask will also make us think what is there. So money management is a life skill, irrespective of what you become in life. You might become a doctor, lawyer, whatever you may become. But money is one thread that will join all of us. And the art of learning money management is what is going to create the difference in all our lives. Why do I say it art? Because science, the resource persons are going to teach you. Art is each one is to own, right? So the science of it will be taught today. The art of it, you will each have their own style of managing your own money. With this note, this is the logic behind which we decided to celebrate the Global Money Week. With this, I would like to welcome our special guest, Shri Yogesh Kundnani ji. Yogesh ji is the Vice President at CDSL, which is Central Depository Services Limited. He has approximately 25 years of experience in capital markets and has been an investor for more than 35 years in the capital markets. He's a keen observer and follower of capital markets and have conducted 100 plus investor education and awareness programs across the country. He has great knowledge on depository services, mutual funds, and the capital markets. And we all are really eager to listen to his address. And with this note, I personally welcome you, sir. On behalf of HR College BFM committee, we welcome you, sir, to give your address. Yogesh ji, over to you.
Thank you very much, Naveen ji. Thank you, Shweta Singh. Thank you, Krishna Foundation also. Incidentally, to start on a lighter note, Naveen ji, your daughter can also sit and listen and see this program, because the financial the financial savings, learning about the capital market should start at a very young age. So if she starts grasps all that concepts, I'm sure we'll have more learned investors across the country. Incidentally, my daughter is also sitting along with me only. She's still in the 9th standard actually, but then she said that if you're addressing HR college, I would also like to sit, because it is her dream also to join HR college after she finishes 10th, and she also plans to do study financial markets and capital markets. Looking at how her dad is working in the capital markets has been reasonably successful. I would not say I am successful in investing, because as I told you, we are also all learning. Each day is a new learning experience for all of us. So I'm not saying that someone student over here may ask me something about Bitcoins. I will be very humble and say that I don't know anything about Bitcoin. Sorry. So I can teach basics of capital markets, how we should go about the process of investing. And, we hope that in long term, we will all be successful investors. I don't know whether we would be successful traders or not, but I'm sure if we invest for long term, we can become reasonably good, investors in our lifetime. So with those small note, I'll just share a few thoughts with you. After that, I will give the floor to my colleague Sanjay Nunes, who has prepared a proper structured presentation in association with SEBI. So whenever we do these, so we as depositories, incidentally, let me introduce my company also, for whom we work. Is that we come from CDSL, which stands for Central Depository Services India Limited. All of you here may be knowing capital stock exchanges, because Bombay Stock Exchange has got a history of maybe more than 145 years. NSE, I remember, started in 1993 after the SEBI came into picture in 1992. Prior to 1992, there was no regulator in the country which was regulating the capital markets. So it was the stock exchanges who were actually regulating, making all the rules and all. So 93 SEBI came, 92 the SEBI Act was passed by the Parliament. We as depositories, we came much after that. So Depositories Act was passed by our Parliament in 1996, and we CDSL started our operations in 98. So we proudly say that we are a 20 years young organization. We are not an old organization like BSE or NSE, but we are equally important. See, as far as the entire capital market ecosystem is concerned, our role as a depository is very critical, because today आज जो भी सौदा होता है, I'll speak Hindi also, because in our markets, we speak more of Hindi and Gujarati. So I try to, use mix of English and Hindi to communicate what I'm really trying to say. I think everyone saw scam. I mean, most of the students must have seen. So they have used these classic words which we actually used to say when we used to go on the stock trading floor of the exchange. I have personally worked on the Bombay Stock Exchange trading floor also from 1987 to 1992, and then we had switched to the screen-based trading system, I remember. So 5 years I had gone on the trading floor of the exchange also. So coming back to what we at CDSL do is really we once that all the trades which take place on the exchange, you see TV and all media channels, they all talk about everything pre-trade, या जब भी सौदा होता है तभी की बात करता है. But no one talks about the hard work that we do at depository after the trades have taken place. See, millions of trades take place between 9:15 in the morning when the market opens till 3:30 when the market closes. Crores of volumes, lakhs of trades take place on the F&O segment, futures and options segment, on the cash delivery segment. It is we as depository, our role starts after 3:30, So after the trades have taken place, we do the important work of settlement of trades. So say suppose I have sold 100 shares of Infosys, and Mr. Naveen Punjabi has bought those 100 shares of Infosys. So finally the stock has to go from my demat account to his demat account. Then only he'll be the owner of those shares, right? So this important work of transferring of securities from all the sellers in the capital market to all the buyers in the capital market, whether it is NSE, BSE, is done by us as the depository. So this is the transfer from the seller to the buyer. Vice versa, also the the money part. So the money which Mr. Naveen Punjabi will pay for purchasing 100 shares of Infosys finally need to come into my bank account also, because I have sold those 100 shares. So the settlement of the money part as well as the settlement of the securities part, this is known as settlement on the stock exchanges, NSE and BSE. This important work is done by us as the depository. So we quietly do the work behind the curtains or behind the screen. So our role is equally important. We all read in the media that NSE was trading systems were down for 5 hours some time back. So that all comes in the media. But imagine if we as depository, we've been working 20 years smoothly. Everything settlement has been going on smoothly for the last 20 years. Imagine if our systems were to go down, how much problem it will be, because the trades have already taken place, and the trades have taken place. Now they need to be settled also. Okay, so someone is asking that please cover trading and settlement in detail. Yes, of course, in the presentation which Sanjay Nunes will be doing after my speech, we would be covering the trade and settlement part also in detail by using the slides. So please bear with us for a few moments. So this is as far as our CDSL is concerned. We are today the country's largest depository. There are 2 depositories operating in the country today. One is CDSL, from where we come, and the other is NSDL, which is the National Securities Depository Limited. We are promoted by a host of banks and Bombay Stock Exchange, NSDL is promoted by the National Stock Exchange, and few banks are there. So there are few banks who are common promoters across CDSL and NSDL. So this is as far as the depositories is concerned. So we are actually 20 years young. We are not 145 years old like the Bombay Stock Exchange, or maybe 35 years old like the National Stock Exchange. We are a young 20 years organization, and we are trying to run efficiently the capital markets in the country, so that smoothly the settlement and the trade part is handled across the capital market. So with this, I would like to start with, so this is as far as the depository is concerned. I would not like to speak more on depositories because Sanjay Nunes will be covering in detail about depositories. In case if you have question and answers on depositories, we can very well cover after this. So incidentally, I was speaking to Mr. Naveen Punjabi also when he called me up. So we are actually experts on depositories. You can ask anything on depositories. We will be able to answer in a fairly convenient and convincing manner to you. Whatever we have learned in these last 20 years since I have joined CDSL, and depositories also incidentally started 20 years itself. I would also like to share few points on capital market investing. That is what I have learned in 35 years. There is no book. I have not referred to any book or anything. This is my personal experience, which I would like to share with you. Like someone said in his speech, I don't remember the guy's name. You are celebrating Global Money Week for learn, save, and earn, right? This is what the words were used. Learning, we are learning through these interactive sessions, right? We call them as investor education or investor awareness programs, as it is called as. And it is, in 2-hour session, it is simply not possible to do justice to such a vast topic. So I had requested Mr. Naveen Punjabi also, let's make this a regular feature. Maybe once every quarter we can come and interact with the students, learn from all of you, and try to share our experiences also. So I'm not saying I'm here to teach you anything. I'm here to share my experience with you. At the same time, I'm here to learn from you. Okay. See, in the last, after COVID has happened, the entire globe is using this term known as Robin Hood investors, right? Who are these Robin Hood investors? These are these Robin Hood investors, whether it is a developed country like US or a developing country like ours, India. Okay, these are these Robin Hood investors who have come new to the capital market because they were at home or घर में कुछ करने को था नहीं. So they have opened and tried to do trading or try to do investing, and thereby augment their resources by earning something. Okay, so these are known as Robin Hood investors. Typically, what we have seen is the profile that we do is these are all young investors who have opened. So typically, they may be less than 30 years of age. So I'm sure a lot of students here also, I would categorize them as Robin Hood investors. I am a very old person. I am actually 49 years of age. So please pardon me. I may not be thinking on same lines like you may be thinking about, Robin, like you may be a Robin Hood investor. I am not. But I'm here to learn from you as Robin Hood investors what you feel, what is there in your mind. Because if I'm able to learn from you as investors what you feel in mind, it will help me in becoming a much better investor. See, end of the day, whether you are a Robin Hood investor or a old investor like me, we all need to learn on a daily basis. And because we will learn, because we will improve our knowledge, we will become successful investor. So this is the objective behind this. Now I'll come to someone said learn. So we are learning by organizing these programs. Save. Many people talk about what is saving, what is investing. I'll give you a simple example between what is saving versus what is investing. My father had taught me that. So it is not there in any book. I'm just sharing my experiences as I told you. So what my father used to tell me is, बेटा जब भी तुम काम पे लगोगे तो तुम 100 रुपया अगर कमाते हो, ठीक है, तो 100 रुपए में से आप 30 रुपीज तो एटलीस्ट सेव करो और बाकी 70 रुपीज जो है आप अपना घर खर्चे के लिए आप यूज कर सकते हैं. So whether you earn 100 rupees or you earn 1,000 rupees or you earn 1 lakh rupees in a month, 30% should be saved, set aside, and this saving again should not be in bank account, because as we all know, bank accounts will give us 3.5% or 4% interest, which will barely not beat inflation also. Okay, so we should actually invest this 30 rupees based on our risk profile. So if you are a conservative investor, please don't invest full money, that full 30 rupees in equities. Maybe invest 70% of that 30 rupees in equity and balance that risk by investing 30 rupees in some debt or fixed income instruments. There are a lot of debt mutual funds also available. Okay, so but 30 rupees should be saved. So I remember this my father used to tell me, which was when I was, this is in the 1990s I'm talking about, the decade of 1990 to 2000, when actually Manmohan Singh and the first liberalization country had seen. Many of the students here may not have been born that time also, but that was the true liberalization path that the country had followed. That was the dream budget of Manmohan Singh when he first became the prime minister. I'm not supporting, incidentally, any party over here. I'm neutral to any party. Please don't associate me with either Congress or BJP or anyone. I'm just an investor, and I try to take advantage of whatever economy is performing and try to enhance my income. That is my only objective, and that is what I'm sharing with you. So we had embarked, the country had embarked on the liberalization path. So that time in 1990s, my dad used to tell me that बेटा 30 रुपया तुम सेव करना 30% और 100 रुपया 100 रुपए में से. So this is the 30-70 concept basically. 30. So when you all students, the key takeaway here is, when you all students also, when you start your first job after you have finished your graduation or post graduation, please save at least 30% of your money and invest it for long term, short term or medium term goals, whatever are your goals. So this will help you a long way in achieving financial independence. This is what is very important. So suppose if you plan to retire at 60, and suppose if you start investing at 25, you can actually retire at 50 years. I'm not saying you retire at 50 years. Please be active throughout your lifetime. Okay, but you can be active as an investor. Okay, so you can dedicate your resources, time in investing after 50 years, because you would have earned sufficient money by that time. I have not earned. Let me be very categorical. That is why I'm still working. I'm just 49 years of age. But if I would have also started investing way back at 22 or 23, what I'm telling you, maybe by next year I would have also retired and I would have become the full-fledged investor. So this is a key takeaway for this thing. So this is the concept of saving versus investing. So in 1990s, if you take the data, economic data which the government actually releases, in 1990s to 2000, we had a very high savings rate in the country. The savings rate was somewhere around 35 to 36%, which means 100 rupees mein se average investors or average population was actually, saving 35 or 36 rupees. Slowly over the years, that ratio has now gone down to somewhere around 26. I was looking at last year's data. This data you will get in the economic survey. See, every year budget, the government comes out with the budget. One day before the budget, economic survey is given. So in the economic survey, it was given that the savings rate of the country is somewhere around 26%. So the savings rate has continuously gone down over the years, actually, from 35 or 36 to, so it is basically 10 basis points, which we call as gone down. So it is not good sign. So basically, country is moving from saving to more of spending or consumerism. Of course, consumerism is also important, because that is how the companies will earn, and we as stock investors will get the returns by investing in such stocks. So you need to balance between your savings and your spending. So that's why I said the concept of 30-70 is a good balance. 30 rupees you save and 70 rupees you spend on your daily things and wherever you are required to spend. Okay, this is saving versus investing. The second important point which I want to talk about is the thumb rule. In capital markets, we call it something known as thumb rule. And so if you are, say, 20 years of age, then you take your age as 100. Suppose if you were to live till 100 years, then 100 minus 20. So 80 rupees, the 80 that you get, 80% should go in equities. Because you are a young investor, 20 years of age, over the next 40-45 years till you are earning, if you invest in equities, that money will compound over those 40-45 years. There are 7 wonders in the world, that, as we all know. Taj Mahal is one of them. There is a 8th wonder also, which Warren Buffett has said. That is known as the wonder of compounding. So compounding is the 8th wonder in the world. I don't know, many people may not talk you about this, but compounding is actually the 8th wonder in the world. If you see the index today, I'll just give you a simple example of Indian example. Because you'll be able to relate. Index is somewhere around 50,000 today. The base of this index was 100, which was in 1979. BSE started with Sensex. So suppose in 79, if you were alive and if you would have invested 100 rupees in Sensex and just let it remain, don't do anything with that 100 rupees. That 100 rupees is now worth 50,000. I am not taking the dividends also. Dividend is aside. That 100 rupees is actually become 50,000. And if you take the dividend which would have come to you by investing in the 30 stocks, you are all aware Sensex is the weighted average of 30 top companies in India today. So if you take all these 30 companies, incidentally give dividend also every year. So I'm not taking the dividend, leave aside the dividend. If that 100 rupees was invested in 1979 and you don't do anything with it, that 100 rupees today is worth 50,000 rupees. So this is the the 8th wonder of compounding which I'm talking about. If you add the dividends, that 50,000 is worth somewhere around 65,000 rupees today. And so why Warren Buffett is so popular or so successful is because for last 50 years he has invested in good companies and he's not done anything with it. He's just bought and sit tight on those companies. This is what is important. You don't need to trade in the markets. Please understand, if you will trade, you will actually lose more money rather than earn more money. You take any successful investor, whether it is India or any country across the globe, it is because they have been patient and they have spent time in the market. So time is more important than rather timing the market. See, timing the market on a regular basis is very, very difficult and not really. I would rather say it is impossible. Even Rakesh Jhunjhunwala himself has admitted that it's not possible for him to time the market perfectly. You may use whatever tools you have. You may use technical analysis, you may use fundamental analysis, whatever tools which are available in the market, but it is very difficult to time the market on a consistent and successful basis over lifetime, or over 40 years. You may be successful for 1 year, 2 years, and then you will become overconfident. Market will tend to make you overconfident. अरे मैं तो successful था, मैंने ये लिया, ये बढ़ गया. Today if you compare March of 2021 with March of 2020, exactly 1 year back, 23rd of March 2020, our market was down 13%. Sensex was down 13% and index had touched a low of somewhere around 26,800. I remember I got lots of WhatsApp today floating around saying that last year, exactly same day, we were at the lows of the market. So no one was able to predict, and no one will be able to predict also कि 23rd March 2022 मतलब एक साल के बाद क्या इंडेक्स होगा. It can be anything. We may be again at 30,000. We may be at 1 lakh also. No one can predict. Over short term, it is not possible to predict. But over 5 years, 10 years, 15 years, you can reasonably predict that you can earn a good return of at least 15% per annum, and you will beat inflation comprehensively. So this is what message I want to convey. So when you are saving, so this was the concept of saving versus investing. Now when you are investing, one more concept I want to introduce here, which we normally call as goal-based investing. So you try to identify the objective. Why are you investing? So you may be having some short-term goals, like you may be having a a dream. I have a dream personally. Okay, for last 1 year we have all been sitting at homes. We have not been able to travel. So I have a dream. That after 1 year when COVID goes through and the entire world is vaccinated. Incidentally, let me tell you, I'm optimistic and I will always remain optimist. So after 1 year, when the entire globe has become vaccinated, we all will be able to travel. And I would like to, go to Japan. I have a dream that I want to go to Japan after 1 year. So I will need somewhere around, 2 lakh rupees. So this is my short-term goal. कि मेरे को 1 साल के बाद तो 2 लाख रुपया रखना है, so that me, my wife and my daughter will go to Japan after 1 year. Now, if I have a horizon of 1 year, I cannot predict what the stock market will be. Okay. So this 2 lakh which I want to, garner, I will invest in debt mutual funds, because debt is normally more stable as compared to equities. So if your time horizon is, 3 years or less than 3 years, please don't go in equities. Go in less risky instruments, like there are a lot of debt mutual funds available today. You can invest in debt mutual funds. They are less volatile and you get better returns than bank fixed deposits, and are more tax efficient as compared to bank fixed deposits. Okay. If your horizon is medium term, say after 3 years, you want to buy a small second home. Say this is what I'm just trying to correlate. So after 3 years, say your financial position is slightly better and you want to buy a second home. Say you want to buy a small flat in Khandala or Lonavala. Okay, I'm just giving an example of say 15 lakhs. Okay, you'll be buying a small house, so that every weekend you will go there. Or maybe if work from home is more popular after 3 years, COVID has taught us to work from home. Incidentally, we are all attending this session from home only. So even though if we join the our offices, our office will be more liberal and allow के महीने में बेटा एक वीक तुम घर से काम करो. तो मैं एक वीक खंडाला में जाके मेरे सेकेंड होम से वहां से वाईफाई से कनेक्ट करूंगा लैपटॉप यूज करके, और मैं खंडाला, तो आई विल नीड होम एट खंडाला आफ्टर 3 years. So again 3 years, you cannot go full hog in equities. So full 100 rupees should not be invested in equities. Again, you use the balance principle of 70 rupees in equities and 30 in debt. So it's a hybrid strategy that we call. And any goal after 5 years. So after 5 years you may be having a goal कि आज मैं 2 bedroom hall kitchen में रह रहा हूँ in अंधेरी लोखंडवाला, and say after 5 years I want to buy a slightly bigger house. Okay, so currently I am staying in a 2 bedroom hall kitchen. Maybe after 5 years my as I told you, I am an optimist, so I would like to buy a 3 bedroom hall kitchen flat. Okay, so this is a goal which I have after say 7 years or 8 years. So after 7 or 8 years, which is a long-term goal, I will, invest in equities, because as I told you, over long-term, equity will be much more superior asset class as compared to, debt or gold. Okay, so this is what is. So you invest based on your goals, on your objectives, short-term, medium-term, and long-term. So this is what I was talking about, goal-based investing. See, why I'm saying this goal-based investing is, then you take out all this, logic. See, in TV and all, they come and talk anything, all bullshit. This is the word that I will use. Is, they talk ke aaj, market kya band hoga. अरे क्या फर्क पड़ता है सर, मार्केट 50,000 के 1000 पॉइंट नीचे बंद हो, 1000 पॉइंट ऊपर बंद, क्या फर्क पड़ता है मुझे तो 8 साल के बाद इंडेक्स क्या होने वाला है वो इंपॉर्टेंट है ना. See, there are very smart investors who invested in last March also. Because when you are investing in equities, you are investing for a period of 8 years, 10 years. So, अगर कोविड आ भी गया तो कोविड थोड़े 2 साल के बाद या 5 साल के बाद ऑल ओवर द ग्लोब में होने वाला है. सी मेडिकल साइंस इतना आगे निकल गया है कि 1 साल के बाद हमने वैक्सीन ढूंढ लिया, ठीक है, 1 साल के बाद वैक्सीन ऑल ओवर द ग्लोब लग जाएगा. So, currently, I'll give you a simple example. See, currently markets are very volatile. If you read the news and all, see the channels and all, everyone is talking about a second COVID wave in the country today, right? But if you want to invest in equities, what difference does it make you? See, when you are investing in equities, you are investing for 8 years, 10 years. 8 साल के बाद सर थोड़ा ही कोविड रहने वाला है, कोविड तो निकल जाएगा, मार्केट्स आर गोइंग टू रिकवर. ओके, सो व्हाट्स द पॉइंट इन टॉकिंग, ये सब जो टीवी में बात कर रहे हैं कि आप इक्विटी में इन्वेस्ट करो, ये स्टॉक में इन्वेस्ट करो, या ये स्टॉक आप शॉर्ट करो F&O में जाके, इसका क्या मतलब है? हम लोग तो 8 साल 10 साल के लिए इन्वेस्ट करने वाले हैं, है ना. तो इफ आई एम इन्वेस्टिंग फॉर मोर देन 5 years in equities, all this COVID and all is immaterial for me. COVID is actually it is a non-event for all of me. Every time before budget also people talk, कि budget में कौन से sector को फायदा होगा, कौन से stock, it is all immaterial. See, budget is a non-event actually. If you are investing looking at what will come in the budget, it is actually not a non-event, because you are investing for 5 years, your goal is after 5 years. So you should actually be worried कि 5 साल के बाद इकोनॉमी कैसा करेगा और 5 साल के बाद इंडेक्स क्या होगा. So after 5 years, of course, the index will at least compound by 10 or 15%, because history has shown us. See, I talked about history. If you take the example of Sensex has given compounded annual growth, CAGR growth of 16% from 1979 till 2021. So if history has taught us, then in 40 years, Sensex has given a return of 16%, then in the next 40 years also, index will at least grow by 12%, even if you are a conservative investor. So you should invest for after 10 years that 12% compounding. So that's what I was talking about, the 8th wonder of the world, which is compounding. So if you are investing for 10 years, then all these near-term events have got no meaning at all. COVID, interest rates, these are all non-events actually for all of us. So you invest on goals. So if you are investing based on goals, keep systematically investing. See, ये जो SIP बोल रहे हैं, I am trying to introduce this concept for you in a very simple manner. You keep investing at all market levels. Don't think आज के बारे में. See, if you would have been thinking about the same in an rational way in March 2020 also, you would have considered, continued your SIPs even at the index of 25,000, 26,000, 30,000, 35,000. जैसे जैसे market बढ़ता गया last 1 साल में, every month you would have invested, and look, now you are sitting at 50,000. I'm not saying market will go up 55,000 from year after 1 year. I am not at all taking a guess over the index. I am talking about goal-based investing. कि मैं शॉर्ट टर्म में नेक्स्ट ईयर मैं जापान जाने वाला हूं, मैं 3 साल के बाद एक छोटा सा फ्लैट खंडाला में लेने वाला हूं, और मैं 7 साल के बाद लोखंड वाला में एक बड़ा सा फ्लैट लेने वाला हूं. And you keep investing towards that goal. You don't look at index. Please don't see TV channels. TV channels will, take your mind off, and what you are investing for your goals will take your mind from there, and you will think कि मैं तो बड़ा महारथी बन गया हूँ, इन्वेस्टर बन गया हूँ, और मैं डेली मार्केट को ट्रेड करूंगा, और मैं ट्रेडिंग में से ज्यादा पैसा बनाऊंगा इन्वेस्टिंग से. प्लीज let me also tell you, I have been investing for 35 years. Okay, I have invested directly in stocks also, and I have invested through mutual funds also. Okay. I would like to be very candid here and tell you that my mutual fund portfolio has given me much more better returns as compared to stocks. You know why? Because in stocks, I bought, sold, I bought other stocks also. I have not sat tight on stock on those good companies like Warren Buffett. Okay, so that is why I have not earned any money. Not I would have earned somewhere around 8% or so, जो मुझे fixed deposit में भी मिल जाता. तो मैं इतना अपना रात का नींद क्यों बर्बाद करूं by investing in stocks, buying this, selling that, buying A stock, selling B stock, and continuously trading. My mutual fund portfolio, in which I have not done anything for last 35 years, has given me 15% compounded annual returns. So it's better to invest in mutual funds rather than investing in stocks directly. That is what I am talking about. Say after 35 years also, knowing about all companies, how Infosys is, what is its EPS and all, still I am not able to take a guess कि Infosys कैसे करेगा, TCS कैसे करेगा, या HUL कैसे करेगा, Asian Paints कैसे करेगा. So better to invest in mutual funds, So you are at that peace of mind. You are only focused on your short term, medium term, and long term goals. You are not trading daily in, daily out. You are focused on your goals, and you are investing on your objective is to invest on goal based investing. This is what I wanted to introduce. I would like to end my speech here, please. I mean I can go on and all because I am passionate about it, but I'd like to give to Sanjay Nunes. Let him take about basics of financial planning and depository services using slides, and then we can open the floor for question and answers. Thank you very much.
Thank you, Yogesh ji. I think in a very simple and candid way, you have explained us what is SIP and what is goal-based investing. And I think the students have also become very active on the chat window. They've also started writing a lot of questions for Sanjay ji. So it is always said that after Sachin Tendulkar, it becomes challenging for the other batsmen to come and bat. So now Sanjay ji, over to you.
But
over to the team to introduce Sanjay ji and then for him to take it forward.
But just one point. If you thank you very much for calling me Sanjay Tendulkar, Sachin Tendulkar. But I would like to say that Sanjay Nunes is like Virat Kohli.
Arey, kya baat hai. So then I think the team itself is going to win the World Cup. So thank you so much, sir, for this amazing camaraderie as well. So over to Shweta ji to introduce Sanjay Nunes. Welcome, Sanjay ji. We look forward to hearing from you.
Thank you, Naveen sir. I take this opportunity to introduce our resource person, Mr. Sanjay Nunes, who's from CDSL, working in the Investor Awareness Department. Sir is looking after investor awareness activities and conducting awareness programs across Pan-India and spreading the awareness about financial literacy from the depository point of view in particular, and other capital market initiatives in general. Mr. Sanjay has over 11 years of wide experience into capital market and finance industry. He's BCom, MCom, MBA, M Economics from University of Mumbai, and CA from ICAI. So, sir, over to you for the presentation. Thank you.
Thank you, Shweta madam, Naveen sir, Yogesh sir, for the kind introduction. That was a generous one. Myself, Sanjay Nunes, on behalf of CDSL, welcome all the respected investors in today's webinar. Before starting today's presentation, I would like to highlight to you about Central Depository Services India Limited, known as CDSL. Friends, CDSL was incorporated in December 1997. As you are aware, the shareholders are the part owners of the company. The top shareholders of CDSL are known as Bombay Stock Exchange, known as BSE, followed by HDFC Bank, Standard Chartered Bank, Canara Bank, and LIC of India. It is the only first and only listed depository in Asia Pacific. It is first and only depository to operate in IFSC. As you can see that CDSL has achieved a lot of ISO certification on important activities known as specific on IT systems and processes, business continuity management systems, e-voting processes. So based on the certification, friends, it is proved that all the securities in CDSL account are safe and secure. And that is in line with CDSL main goal, that is convenient, dependable, and secure depository services. Okay, I would like to highlight to all the participants in today's webinar regarding role of depository in capital market, as Yogesh sir has already given you brief about CDSL. But friends, I would like to highlight a few minutes on this particular, what is the role of deposit in capital market. Friends, in the 21st century, many aspects of technology has become a blessing. And one such blessing is the depository system, which is nothing but the electronic mode of holding securities. Friends, there was a time when companies used to issue shared certificates in physical form. The investors were supposed to keep the certificate safe and forward it to the buyer once the shares is sold. Okay. They used to keep their shared certificates in cupboard or in their houses. Now, with the introduction of Depositories Act 1996, there is no paperwork involved and all the entries are done electronically, friends. The introduction of depository system also gave a rise to a new type of stock trade called as dematerialization. And this is how depository started holding the shares, bonds, debentures, mutual fund units in electronic form, which is also known as dematerialization of shares or demat account. Friends, depository also form a crucial part in the capital market structure by providing services to stock exchanges, clearing corporation, depository participants known as DPs, issuers, and investors. Based upon this, I would like to highlight that where is CDSL today? Friends, I would be pleased and happy to inform you that CDSL has across 3 crore active demat accounts situated in over 97 pin codes. We have around 589 DP register operating over 20,000 touch points. We have around 15,000, approximately 16,000 unique companies, 14,600 equity agents, and 33,789 other agents. So as you can see, that CDSL is one of the listed company and the only listed company with 3 crore active demat accounts, friends. So with this brief introduction on depository, I would like to start today's session by quoting a famous phrase by Mr. Joe Biden. He says that don't tell me what you value. Listen to me properly, friends. He says, don't tell me what you value, show me your budget and I will tell you what you value. Friends, you are familiar with the expression, action speaks louder than words. And it is exactly what is the adage is all about. Your expenditures are consequences of your actions, right? Hope everybody agrees to it. And depending upon that, where you choose to put your money is essentially what your value in life. Say, for example, some people might value the luxury of being able to buy a coffee on the way to work. Some people might value the experience of eating in a restaurant for lunch. But the truth is that most people have not even reflected that for what reason they are spending and on why they are spending. When you have not made a conscious choice of what you are spending your money, friends, then it is often shows that you really value the coffee, but it is the comfort, friends. Remember that. But you don't know where you are spending and you are wasting your money on that. Friends, to gain control over expenditure and to consciously invest in what you really value in life, friends, I highly recommend to have a personal budget, because that will help you to compare your income and analyze if these expenses are aligned with what you value in life. If not, then it is the high time to adjust your priority on priority basis. So if you are in need of a little money saving motivation from us, or you just want a further explanation as to why saving is important, then you are in the right spot by investing your precious time into today's webinar. So the lessons on savings will be in today's session will be the need for savings, inflation and investing, financial planning and investment planning. We will concentrate on investment and asset class and investment criteria, services offered by depository, pledge, what do you mean by pledge and margin pledge, CDSL, what value-added digital services offered by CDSL, and takeaway for investors. Now, friends, why we are saving? Why there is a need for saving? So, friends, I would like to take a deeper dive into the importance of saving money in today's webinar. Friends, freedom to pursue your career or fulfill your financial goals. Everyone who is attending this webinar has one or the other goal or dream to fulfill in their life, right? Say, for example, one has to pursue a career you love, but how to achieve it is a big question in front of everybody. For that, you require finance and the capability to do hard work. If you have both, then one can achieve this goal. But what if, due to financial constraint, you are not able to meet your career goals or you are being restricted to achieve your goal? No need to worry, friends. You can still achieve your goals by working and then studying. But it is only possible when you have ample cash sitting in your savings account and you have to control your expenditures. And with that savings, you can invest in yourself and you can fulfill your dreams. Second point I would like to highlight is that long-term security. No matter how hard we try, nobody can predict the future. Okay, nobody can predict the market, nobody can also predict the future. Either you, neither me cannot predict the future. What is going to happen after 1 hour? What is going to happen after 1 day? Nobody is going to predict. And for that reason, best example is the current pandemic COVID-19. Many people lost their job, friends. There was sudden medical emergencies in families, excess hospitalization bills. And to meet this, if you have no cash park in your savings account, then think about it, how you're going to weather any financial storm or any financial emergency in your life. Students, take 1 or 2 minutes and think over it. Today, I'm going to put stress on your mind. Just think without investments. How do you plan to make money when you are too old to work? If you lose your job, will you able to pay your bills? Will you able to pay your emergency in case of emergency? Think about this perspective and start investing from today. If you are still waiting for the day to come, then you are too late for that day. So my advice in today's session is that you start investing from today itself. Many students might not agree with this point and they can raise a question to me that from where we will bring the money to invest? We are not yet employed. So the simple answer to such type of students is that, what about the pocket money? What you are doing about the pocket money? It is a free income you are getting from your parents. Value that free income. What are you doing with that money? Think over it, whether I'm spending the entire pocket money or whether I'm saving for any emergency. Friends, in today's world, you can also start saving with ₹100 in bank savings account, or you can start investing your savings in mutual funds with minimum amount of ₹100 or 500, depends upon the scheme. But that financial plan discipline should come from within. Okay, from within it should come, and from today onwards, if you have made up your mind by listening to these points, then you have to start from today itself. You should not wait for tomorrow to come. Saving for fun. Many people think we have to make a choice between saving money and achieving fun. But this is a poisonous mentality, friends. In fact, fun is a critical part of personal finance. As Yogesh sir said, I have already informed that I want to go to Japan. So it is a saving for fun. Okay. And fun is a critical part of personal finance. It is essential for your financial and physical well-being. Truthfully, you should always set a little money aside for enjoyment. Friends, your marriage. Students saving money is good for your marriage. And if you don't believe me, then within few years you will experience it. And you will remember today's webinar that somebody had spoken about savings for marriage. Leaving a financial legacy. Think of a situation, friends, that today is your last day in life. Think. There is no harm in thinking. Then what kind of financial legacy would you be leaving behind for your dependents? Just think over it. Would your story be one of debt and financial burden for your family? Or would you leave a legacy of financial strength, wisdom, and honor? How it is? It is up to you. Your financial legacy is important to the people around you. It might be positive or negative on your loved ones. That depends upon you and your savings and investments. Okay, big purchases. Why? Why we need savings to buy big purchases? Big purchases are fun, at times necessary. Yes, it is very much necessary. You need a car so that you can drive to work or you can go for an outing. Very much required. Living in a home without any furniture is uncomfortable, right? So for that extraordinary needs to be fulfilled, you have to save and invest in order to grow your money. Friends, now this is the last stage where you are thinking about retirement planning. Retirement, friends, need not be only about gardening and reading. It is not only that after retirement, I will do gardening, I will read a lot of books. No, that is a primary part. But what about the finance? What about the expenditure? From where you are going to spend? Your income is going to stop. If planned for from today itself, friends, it can be the best stage of your life. Remember me. You should not be basing your saving decisions on the notion that your sons and daughters will take care of you. Friends, gone are those days. You have to be independent. So it is about ensuring that there is an adequate income or large corpus to meet the expenses in the retirement stage of an individual life cycle. Talk about inflation. This is one of the main enemies of saving money. It is also known as silent killer, friends, and it earns its reputation by slowly deteriorating on the purchasing power of your money over time. Remember, onion prices in the month of October went up to 100 per kg, but in the month of June, the cost of onion was 20 rupees per kg. Now you are paying this 80 rupees extra. That is nothing but inflation. You can see the prices of petrol are increasing like anything. What is that? It is detouring your purchasing power. As you can see that money loses value over time. Yes, goods gradually becomes expensive. As you take the example, as we have taken the example of onion, inflation increases over time and decreases the value of money. Yes, in the month of October, we were paying 100 rupees. In the same year, in the month of June, we were paying 20 rupees for the same vegetable or the onion. Now we are paying 80 rupees extra. What is that? It is nothing but the difference is inflation. Our savings must grow with time, and this is called investing. Now, financial planning and investment planning. Friends, a financial plan is a valuation of your current financial condition. Remember, students, a thorough financial plan will help you to address your current savings, budgeting, your insurance, your tax planning, your estate planning, and retirement planning. Remember, your investment plan is dependent upon your financial plan. If you plan your finances properly, then you can easily meet your long and short-term goals, okay, such as retirement or buying a house, or after 1 year going to abroad, buying a vehicle after 1 year. This all depends upon your needs. But for that, you have to first do your homework of financial planning, and depending upon your financial planning, your investment planning is dependent. Now, if you can see the investment trends in India, the formula of saving is income minus expense is equal to savings. But if you see the investment trends in foreign, okay, the formula of saving is income minus saving is equal to expense. So we have to be behind the foreign investment trend. We have to first give priority to savings and then expenditure. As Mr. Warren Buffett sir has said, do not show what is left after spending, instead spend what is left after saving. So this big investor, topmost investor is saying, so in today's session, it is a point of thinking that yes, first priority we have to give on savings and then on expenses. When it comes to financial investment planning, a lot of questions arise in your mind. Okay, there are a lot of questions: how to invest, where to invest, how much to invest, time, what is the time duration I should keep, risk associated, how much risk I should take. No need to worry. If you are capable of handling your finances on your own, it is super. Then you are not perfect, but you can manage your finances very well. But if not, then you can take the help of financial advisors. There are good financial advisors in the market. You can take help of them. They will guide you in managing your finances and investment. But the discipline of financial should come within you. As Mr. Warren Buffett said, that never depend on single income. Make investment to create a second source. Remember this. I'm repeating again. Never depend on single income. Make investment to create a second source. Why? Because your savings should grow with time to meet your goals and objectives of life. Friends, there are a number of asset classes. You can invest in stocks, mutual funds, real estate, savings, life insurance, share market, foreign exchange, bonds. If you want to invest directly in capital market, you can open demat account, trading account, bank account under one umbrella. Nowadays, you can, and my advice to you that whenever you will open your demat account, trading account, bank account, see to it that you open this account with SEBI registered brokers or SEBI registered DPs. Remember that. Friends, regarding asset allocation, never put all your eggs in one basket. Friends, based on asset allocation, I would like to highlight that financial planners preach it, fund managers recommend it, and investment experts follow it like a religion. Yet the importance of asset allocation is generally lost on retail investors. They feel that we can manage our investment decision on our own. Yes, I have seen disciplined investors throw away the rule book and allow inherent biases to control investment decisions. But at the end, investors earn the returns less than what they have expected. They feel that they are the giants. They know everything. But that is not the case. You have to allocate your investments in different assets so that loss in one sector or in one segment will compensate profit in another segment. So remember that asset allocation is nothing but another name for your diversification. It is how you spread your investment across asset classes. Say, for example, stocks, fixed income, property, and gold. This is purely based on your risk profile. Okay, asset allocation ensures that, as I said, and the adage by Warren Buffett, sir, that don't put all your eggs in one basket. If stock market crashes, the other assets shores up your portfolio. So always segregate your investments, and it is written over there, asset allocation, the key for your financial success. So with this, I would like to highlight on services offered by Depository. Friends, as we have heard in our introduction part, and also Yogesh sir has already given his intro part, that what is the role of depository. So in addition to that, we are going to see some important concepts of depository services. Dematerialization, friend. Dematerialization is converting physical certificates to electronic form. Okay, it's the process of converting physical certificates to electronic form. The basic agenda of dematerialization is to smoothen the process of buying, selling, transferring, and holding shares, and making it cost effective and foolproof. The process of dematerialization starts with opening a demat account. Okay, friends, the process of dematerialization starts with opening a demat account, which is the basic requirement also to get entry in the capital market. In demat account, you can not only hold shares or equities, but also debt instruments. You can also purchase and hold and sell mutual fund units through demat account. In fact, you can even purchase government bonds, exchange traded funds, etc. in the demat account. Now, one might think that we are going to open a demat account, then there is no point of converting physical certificates. Okay, right? But one thing I want to clarify is that there might be physical certificates which are held by your parents or relatives, and they want to convert the same, say for example, from physical to demat. Then you are the person as an advisor to guide them to do this activity by approaching the SEBI registered broker. Or if your parents wants to transfer the shares in your name, but your parents are holding the shares in physical form, then again this activity will help you to convert the shares from paper to online mode. Coming to the next point regarding rematerialization, it is exactly reverse of dematerialization. It is converting electronic securities into physical certificates. Converting electronic securities into physical certificate. Now, friends, but if one thinks of doing this activity, then sufficient balance of security should be there in his or her demat account. Then only there is a point of converting the electronic securities into physical form. But in the current scenario, you will rarely see investors doing this activity. What is transfer of securities? It is a voluntary act by a member, friends. Transfer of share, it is basically handing over the rights and duties of an issuer company to any other person who wishes to become a member of the company. Okay, member means the shareholder in our case of the company. Now, say for example, if parents wants to give shares to his son or daughter, then through transfer mode, he can get the share transfer. Taking another example, if a person or a shareholder has become insolvent, listen to this example properly. If a person or shareholder has become insolvent, and the only option available with him is to sell the shares and get the money to repay his debts. So this will also come under the transfer head. Now, what do you mean by transmission? As you see, that transfer of securities is a voluntary act by a member, but friends, transmission of securities comes by operation of law. It is brought about by operation by law, and it is not a voluntary act. It comes with some purpose. What is that purpose? Say for example, an investor has passed away. Investor has died or passed away. Suppose an investor is suffering from mental illness, or for that reason the shares need to be transferred to his legal heirs. Then through transmission of securities, you can approach your DP or the broker, and through certain formalities you can transfer the shares from your deceased to your legal heirs. But transmission is not a voluntary act. Remember that you cannot go and say to your DP or broker that I want to transmit the shares. No, transmission of shares is by operation of law, and it comes with some purpose. What do you mean by transposition? It is changing one position to another. Okay, it is basically, suppose to understand this term, we will take an example. Suppose Mr. A and Mr. B are holding few shares jointly in physical form. Listen to this example properly, friends. It is very useful. Suppose, think about it, that suppose Mr. A and Mr. B are holding few shares jointly in physical form. Okay, this is one scenario where Mr. A is the first account holder and Mr. B is the second account holder. Right? Okay, they have demat account 2, where now I'm changing the sequence. In first case, where in physical certificates, we saw that A is the first holder and B is the second holder. Now they have demat account 2, where Mr. B is the first holder and Mr. A is the second holder. In such situation, Mr. A and Mr. B apply for a demat conversion of their existing physical certificates. Then it will automatic, and you apply to a DP. In such scenario, if you apply to the DP, okay, in physical certificates, as I said, A is the first holder and B is the second holder, and in demat account, B is the first holder, A is the second holder. And now they have applied for physical shares conversion to demat account, and they have applied to your DP. Okay. Remember, friends, the DP can reject your form, the demat requisition form, stating that the order of account holder is mismatched. Why? Because in physical certificates, we saw that A is the first holder, B is the second. In demat account, what we saw, B is the first holder, A is the second holder. But no need to worry, friends. There is an exception to this concept, stating that when the investors want to do this activity, okay, if you want to change the sequence, then they have to submit the transposition form along with the necessary forms as instructed by the broker. So when you will apply to the DP for conversion of physical certificates to your to online mode, so along with that you have to submit this transposition form also. So it is changing one position to another. Now, what do you mean by pledge? Okay, pledge means, friends, deposit of some personal property as collateral for a debt. As you apply for a gold loan in any bank, in the same way you can apply for a loan against the shares, and this term is known as pledge. Remember that as you apply for gold loans in bank, you can apply for a loan against shares. So that term is known as pledge. So deposit of some personal property, in our case it is shares, as collateral for a debt. Investors, say for example, investors wants to buy funds for to pay margin. Now what is margin, friends? Margin means the broker is providing the client more purchasing power than he or she actually has in their account. I am repeating. Margin means the broker is providing the client more purchasing power. Okay, if in his account only 100 rupees is there, but he wants to buy the shares of 150. So the purchasing power is more. So in that case, if you through pledge, you can borrow the funds from the broker to pay the margin amount. Okay, so it is more purchasing power than he or she actually has in their account. Say for example, when a client wants to pledge his stocks to obtain margin, he has to transfer his securities from his account to the broker's account. Then the broker would pledge their securities to the clearing corporation, and the clearing corporation, then that the entire process would once completed, the amount will be credited to your account. He may pledge his own securities, say for example, shares, bonds, to borrow funds. Now, pledged securities acts as a collateral for the loan. Yes. Now, pledgee or creditee only has the possession of pledged securities and not ownership. The ownership will remain with the original holder. Remember that. If the borrower of funds defaults on payment, okay, then the lender of funds can sell the securities and recover this money. Obviously, if you are not able to pay your money, then the last option is that to sell the lender will sell the shares and he will recover the amount, whatever the principal plus interest amount, and balance he will return to you. Securities are provisionally moved from your pledges, okay, debtor securities account to pledges creditor securities account. Now, what do you mean by margin pledge? It came effective from September 1, 2020. So friends, before taking to this slide, I would like to highlight you before September 1 what actually used to happen. Say for example, when a client wants to pledge his stocks to obtain margin, he has to transfer securities from his account to the broker's account. Okay, then the broker pledges these securities to the clearing corporation. Now the transfer of ownership of these securities leaves a gaping hole in the system, because The investors were not aware that whether the actual broker was transferring the securities to the clearing corporation or not. And there was a gap. There was a gap. And this problem was addressed by SEBI, that there was lots of authorization was taking place due to this gapping hole. Because the investor, normal investor, was not aware whether the broker is actually passing the securities to the clearing corporation or not. So in order to avoid this gapping hole, the regulator came with a new place system with effect from September 1, 2020. So in the new place system, what SEBI said, in the stock did not leave the investor's demat account. Okay, the stock will not leave the investor's demat account. Instead, a pledge is marked in favor of the broker. Remember this. Listen to me carefully. The stockbrokers can accept the security as only in the form of margin pledge created on the securities held in the client's demat account. Okay. The broker is required to open a separate demat account labeled as TMCM Client Securities Margin Pledge Account. For this purpose, TMCM stands for Client Securities Margin Pledge Account. Okay. TMCM stands for Trading Member, Clearing Member. Then the broker then repledges these securities in favor of clearing corporation and obtains a margin. Now, what does the investor need to do? If investors need to give instructions to create a margin pledge on the securities. If you want to give, if you are a CDSL account holder, then through easiest facility, you can give the instructions to the broker or the DP to do the margin pledge. Okay. The pledge to whom? The margin pledge is to be created in favor of specially designated demat account of the stockbroker. Okay. And the name of the account will be TM, as I told you, that it will be Client Securities Margin Account or TMCM Client Securities Margin Pledge Account. So whatever what has introduced new, in short, whatever securities were used to transfer to the broker's account now has stopped in the new system. Now the shares will remain in the account of the investor only. Okay. To talk about settlements of trades done on exchanges are connected to a depository. Friends, I would like to highlight about the settlement part. In simple terms, as customers buy and sell securities through exchange platform, their settlement is routed through depository platform. Say, for example, if someone sells the shares, it is called as pay-in and vice versa. Okay, if someone buys the shares, then it is called as payout. And settlements of trade takes place on T+2 basis or T+2 days. Okay, so how it is? So today, if today is Tuesday, if you are buying any share on Tuesday, this is known as trading day or transaction day, plus 2 days. So on Thursday, the securities will be credited to your demat account. Nowadays, as online paperless trading in shares of the company is compulsory, as I said, due to dematerialization, and the entire world is moving towards computerization in India, okay, and across the globe. Depository services is the name of that mechanism. In this system, transfer of ownership in shares takes place by means of book entry without the physically delivery of shares. Okay, through online you can transfer. You are not aware of who is the buyer, who is the seller. Okay, and through this dematerialization, their shares are transferred from one account to another without physically delivery of shares. Now, I would like to highlight what are the value-added services offered by CDSL, digital services. Okay. Now, friends, if you have made up your mind and you have opened your demat trading account recommending CDSL as a depository, you should request or you should opt for these facilities. You should mark on the form itself that I want these facilities. Say, for example, EASY. EASY stands for Electronic Access to Securities Information. It is very user-friendly. Friends, it is very user-friendly and it is safe and secure to use this internet-based facility. It allows the BOs, okay, the investors to monitor their CDSL account at a place at anywhere, anytime. You can also see if you're traveling at any time, even though in night, you can see through EASY services. You can monitor your transactions. Okay, you will come to know what is the value, what is the transaction taken place in my account. Or talking about the easiest, it is an added advantage. It is an added version of EASY services. It is also an internet-based facility, but the added advantage is that the investors can submit debit instructions through internet through this facility. Okay, so in EASY you can only monitor, but in easiest you can submit debit instructions also in addition to monitoring of your transaction. Coming to the My Easy mobile app, it is an interactive mobile app. Friends, as you youngsters, you should download this mobile app. Okay, it is available in Google Play Store, Windows, iOS. Investors can log in into My Easy mobile app using their easiest login credential. If you are not registered for easiest, then you will not be able to use My Easy app. So if you have already Demat account, recommending CDSL as a depository, or if you want to opt, or you are made up your mind to open a Demat account, trading account, recommending CDSL as a depository to your DP, then you should avail these facilities. Okay. SMS facility. I feel it is an effective risk control mechanism for monitoring your Demat account. You will come to this SMS alert your debit, your credit transactions in your account. You will come to know the corporate actions, okay, or any changes in demographic details in your Demat account. And there is a control that you will come to know that what is going, whether there is any misauthorization taking place in my account. So by this SMS alerts, you will come to know. For that, you have to give your mobile number, which is registered with your DP. Coming to the e-voting, e-voting is an internet-based facility through which shareholders can log in and register their votes on company's resolution. And even if you have one share, you have a right to vote on your company resolutions. Okay. M-voting is an mobile app basically. E-voting, it is an internet-based facility. M-voting is a mobile app. Okay, and it can be, as I said, it can be used at any time, anywhere, and the access to shareholders for voting on company's resolution. Coming to the e-locker, e-locker is an online document storage facility. You can storage your certificates, your post-graduation certificate, your college certificate, your school certificates, or your important documents through this system. So it is available, this facility is available for easiest users. So again, I'm repeating, if you are not applied for these services, or if henceforth, if you are going to open Demat account, apply for these services and use these services. It is very user friendly and is very safe and secure. Talking about eCash, it helps you to get a consolidated statement, friends. Under this service, you will get to know all your portfolio value, all your investment under one umbrella. I would be happy to say that when it was this facility service was introduced in Feb 2015 by CDSL, and till today we are receiving a lot of appreciation across Pan India that this system is very much secure, safe, and we come to know all the portfolio value and the investment details under one umbrella. One thing I want to highlight here is that if you are doing normal transaction, if you are planning to do normal transaction every month, very frequent transaction, then every month you will receive the e-cash statements on your registered email ID. If not, if you are not doing any transaction, and once in half year your DP will forward the e-cash to your registered email ID. If you have any investor grievance, any complaints against broker, against digital company, you can write to us on complaints@cdsl.com. We are always ready to help you. If you want to know any updates, information about CDSL products, if you want to know the upcoming webinars for the benefit of the investors, for the benefit of the students, you can visit our site on www.cdslindia.com. On the right hand side, you will see one lady known as Ask Dia. So you can ask that Dia, okay, and you can get your more information and be updated as an investor. Okay, and you will come to know more and more information about the CDSL products and the upcoming webinars wherein you can attend and you can educate yourself more and more. Because as said, sir also said that from last 33 years he is into this field, but still he is learning. So it is for us, it is a start, and we should do it as a practice to educate ourselves more and more. Take up for investors, update your contact details with your member or DP, update your bank details in your Demat account, very much required. Register your nominee details in Demat account. One thing I want to highlight here on this nominee details, that in a Demat account, you can nominate up to 3 nominees. And it is very much required, friends, because if you, tomorrow, if something happens to you, and if there is no nominee to your Demat account, it is a very tedious and lengthy procedure to get this shares transferred or the assets transfer from the deceased person to the legal heirs. So my advice in today's webinar is that if you are not able to register 3 nominees, at least register 1 nominee in order to avoid the hassle at that moment. Okay. Keep the instruction slip book in your safe custody. Friends, instruction slip book is like your bank checkbook. You don't keep your bank checkbook anywhere open. Okay. You keep, even though if in your house, you keep your bank checkbooks in safe custody. So remember that. Keep your instruction slip book in your safe custody. Register and track your Demat account through CDSL, Easy and SMS facility. Those who have not opted or those who are willing to open a Demat account in future, apply for these facilities. Okay, verify your transactions regularly, which is very much important. Power of attorney, it is an optional document, and be aware while dealing based on unsolicited stock tips. Friends, there are strangers in the market who will call you and who will show you a carrot that within a few days or within few months, your money will be doubled. Friends, don't trade or don't invest on this based on the tips given by strangers, because it is your hardcore money. My suggestion, my advice in today's webinar is that I would like to give an example before ending this webinar. If you want to buy a mobile, friends, if you want to buy a mobile of 10,000 rupees or 20,000 rupees, okay, you do a lot of research on online through Google. You search the features, what is the megapixel camera size, what is, how is the look. You sometimes you also visit the stores physically and see the display. Then one question I want to ask, that if you take a full month to earn your monthly income, you work for 30 days, friends, to earn your salary. Okay, then why not to spend 30 minutes when you are investing your hardcore money? That might be 50,000, 1 lakh rupees, or 10,000 or 20,000 rupees. So think before you invest. Do little bit research. Spend 10-15 minutes. If you're not able to understand, ask your financial advisor, ask your friends. But unless and until you are satisfied, don't invest. Thank you very much. Thank you, HR College. Thank you, Shweta Madam, Naveen Sir, Yogesh Sir, for giving me an opportunity and giving CDSL an opportunity to present our views. Thank you very much. And thank you very much for the patience. Thank you very much. Thanks. Handing over to Shweta Madam.
Thank you, Sanjay sir. Can we go ahead with the question and answers, Kundnani sir and
yes,
Sanjay
madam.
sir?
Please, yeah, we can go ahead with the question.
Can the co-host please read the questions one by one?
Ma'am, some of the questions has been answered by Yogesh sir already in the chat box. So should I go ahead again and read them out?
Yeah, some of them I answered, but if it is not clear, we can, give the answers.
Yeah.
Yogesh sir has already answered most of the questions in the chat itself. Yeah, Shubham Jain has a question. He's raised his hand.
Yeah, to save time, I answered on the chat box itself.
Thank you, Yogesh ji, and thank you, Sanjay, Nunes ji, for this wonderful presentation. A lot of things that honestly I was out of touch of. I could relate to it in terms of e-voting and all the SMSs and everything that we usually get. We now understand the process behind it. Thank you so much for sharing the details.
Thank you.
Thank you, sir. Thank you, sir.
Yeah, so questions. How do you want to go about question answers?
Shweta ma'am?
Yes, sir. So we have a few students who have raised their hands also. So can we allow them to...
I'm going to unmute them and ask them to ask their question. That I think that should be okay.
Yeah.
Hello, sir. I wanted to ask a question. Like, as you discussed, that we should invest in mutual funds that are more like for wealth creation. But, sir, there are some opportunities that are in shares that we can get more interest than mutual funds. Like, mutual fund gave us around 15% interest. But at times, like, I have seen that during IPOs or anything in that, I have got an interest of 50%, even more. So, like, even mutual fund companies, they invest in equities. So what is your point of view on that?
See, you are correct. See, as long as market is doing good, IPOs will also do good, and you will make windfall gains over, after 14 days or 10 days when the stock gets listed. Okay, but then is it the right strategy? I mean, see, in bull markets, typically you will see a lot of IPOs coming and getting listed at a premium, and in the bear markets all these IPOs dry up. Okay, so what a balanced strategy in my view would be, there is something known as a core and a satellite approach to portfolio strategy. Let me introduce that to you. Say for example you want to invest 100 rupees. Okay, you have a investable sum of 100 rupees. What you can do is earmark 100 out of 80 rupees out of that 100 rupees towards your long term investments. See, like you said, IPO is a short term investment, right? You will invest, and as soon as it gets listed, you will sell it and book profit, right? If I have understood correctly. Okay, so what you can do is earmark 20 rupees towards your satellite approach, which is for investing in IPOs, and 80 rupees towards investing in your long term investments. So those 80 rupees should go in mutual funds which are earmarked for your long term goals, and 20 rupees for the short term type of investments where you will invest in IPOs. Okay, now let me give you an example. Typically, we as humans, this is known as behavioral analysis actually. So we as humans, as long as profit milta hai na, to we are happy. So if you have invested in, say, an IPO at 100 rupees, and that get listed after 10 days at, say, 115 rupees. Okay, so you immediately see a profit of 15 rupees, which is 15% returns in 10 days time. If you analyze 15% if you analyze that same 15% in 10 days, you are earning a windfall of, say, around 600% per annum return. So ये सब हमको अच्छा लगता है, and we book profits. But tell me one thing, suppose if you have invested today at 100 rupees and that stock gets listed at 85 rupees, what will you do? Will you book loss also? You will not book loss, right?
No,
So
sir.
what will happen? So what happens, over a period of 10, 20 years now, if you invest in IPOs and you are faced with a loss during the listing or after listing also, typically we as humans know, we tend to not book the losses, and we tend to book the profits very fast. So what happens over a period of 10, 15, 20 years now, you will be saddled in your demat account with these IPO companies which are not doing good and which are incurring loss for you. And because at the back of your mind, you know that you have invested in 100 rupees, you will wait for the market to, the market price to come at 100 and then sell it, or maybe 105 and then book a profit. This is known as overconfidence. Is that we tend to book profit very fast, but we don't tend to book losses. This is behavioral analysis. So you need to be on the guard against that. That's why I said, if you want to remove emotions out of your investment decisions, invest based on your goals. If your goals are for short term, medium term, or long term. If your goals are for short term, please don't invest in equities, because in short term, predicting stock market price performance is extremely difficult, near to impossible. Okay, predicting stock market price over medium term is reasonably possible to do. But investing stock market price performance over long term of 5 years, 10 years, I can do that with some amount of certainty at least. Okay, so that is why, I know I have been in this market for 35 years, but I am not a great proponent of IPO investing, so to speak. If you feel that you can analyze the companies which are coming out with IPOs and with reasonable confidence, about these companies, and these companies will list at a profit, please go ahead and do it. But invest only 10 or 20% of your total investable corpus in IPOs, not your full 100%. Please don't risk your entire 100% capital only on IPOs. That may be a long strategy to follow for the long term. In the short term, yes, it may give you profit, but over a long term, it is very difficult. Like for example, recently Ease My Trip came out with an IPO. I don't know if you're aware. Or Nazara Technologies came out with an IPO. But very little is known about these companies. I mean, we have used their portals and all for booking flight tickets and all. I have personally used. But what is the kind of revenue model that these companies have, and whether this revenue model will sustain over a long period of time is very difficult to predict. Like Nazara Technologies, I believe, has got some games, online games. They have these portals where we can. But what is the revenue model? I mean, I feel to, maybe I'm from the old school of thought, as I keep repeating, telling, I'm maybe from old school of thought. You all guys are, new age Robin Hood investors. Maybe you may be understanding these new age companies better than me. But if you understand the companies better, you understand the revenue model. If you think that these companies will become big, like Infosys or TCS 10 years down the line, please go ahead and invest. There is no harm in investing. But keep reviewing your portfolio periodically every 6 months or 1 year. Whenever you feel that the company in which you are invested in is not doing good, please get out of that company and invest in some good companies. This is my humble request to all of you. I hope I have answered your question.
Hello, sir.
Yes, sir.
Yeah.
Thank you, sir.
So my question is, mutual fund is a long-term game. So you invest in mutual for a long term. But if you want to invest in direct equity, so after analyzing, you get a company, say ABC company, that you know will go do good for the next 10 years. Okay. So then how do you you invest in it? And after investing, say after 1 month, the stock goes down by 20-30%. So how do you take it on you? You see that stock is going down, but you have to invest for long term. But then you get a temptation to sell it because it's down by 20-30%, and you think it may go down more. But you have to hold it for long term. So how do you do that?
Yeah. So first and foremost, speaking about the first line which you said, you invest in mutual funds for long term, but you invest in direct equity and price goes down by 20%. Let me be very categorical. If you are investing in equities, whether you are investing directly or you are investing through the mutual fund route in equity mutual funds, if your time horizon is 5 years or more, then only please come and invest in equities. If your time horizon is less than 5 years, please don't think about equities also. This is my first point to you. Okay. And second point is, I think your question itself answers what I have been trying to tell. As I told you, I have also been investing in last 35 years in direct equities as well as mutual funds. I still don't, come to know why the stock price which I invested in went down by 20%. Okay. So it is better to leave to professional fund managers, as I have been saying. If you don't understand the company well, if you don't know how the stock prices move, because stock prices are very dynamic in nature. Market by itself is very volatile. Okay, please be. And it is always going to be volatile. Because it is volatile, that is why people make money and people lose money also. Okay, it is both ways. The coin is both ways, as they say. Because it is volatile, some traders will make money, some traders will lose money. Because it is volatile, some long-term investors take this as an opportunity. Once in every 5 years, market will give you good opportunity to invest or enter. Like in last March, when we were faced with the pandemic, market went down by 26%. If you know, within 20 days, Sensex was down from its top of some 40,000 to 26,000. Now, if you are a rational investor, as I have always been trying to tell, if you are a rational investor and if you would have thought, ये COVID तो 6 महीने में 1 साल में चले जाएगा ना. See, COVID is not going to remain forever. Please try to remain. So that time market, we were reasonably certain that the market has gone down because lockdown has been imposed across India and across the globe. Once the entire world will come out of the pandemic, slowly the world will normalize and we will be back to our normal way of working. Okay, see, every 100 years a pandemic will come. If you see history, way back in 1929 also the world was faced with a pandemic, wherein it was cholera and typhoid all over, flu also all over the world, and I think more than 4 million people had died during that time. Now, if you compare 29 medical science versus 2020 of now, okay, the medical science has, progressed a lot. Uh, Developing a vaccine some 10 years back used to take 4 or 5 years, but now the world has developed, so many vaccines in such short period of time of 1.5, 2 years. Okay, so good investors who had a time horizon of 5 years, 10 years, okay, they thought कि ये pandemic तो 6 महीना रहेगा, 1 साल रहेगा. In any case, so suppose if you would have bought something at say 40,000 also, okay, before Modi announced a lockdown, I'm just giving a hypothetical thing that before Modi announced the lockdown, one day before, suppose if you would have bought a good company like HDFC Bank or TCS or Infosys. I'm just giving examples. Please don't go ahead and buy HDFC Bank today or tomorrow based on what I am saying. Please do your own judgment and then only buy. So suppose if you are reasonably confident, you have a strong conviction that HDFC Bank will recover in the next 1 year and over next 5 years, 10 years will double or triple from these values, then you don't need to panic. Okay, but if you would have invested with a time horizon of 1 month or 2 months, then obviously it was reason for you to panic, because after 1 or 2 years you need that money. Okay, that's why I'm repeatedly telling that when I will go to Japan after 1 year, the funds which I will earmark for my Japan trip, I will not invest in equity, please. No, equity is a no for me. Whether it is a mutual fund or the direct equity route, equity is a no. I will invest this money in relatively less volatile type of mutual fund schemes. Like you have see, in mutual funds also you have various type of categories. Okay, you have equity funds, you have sector funds, you have mid cap funds, you have small cap funds, you have hybrid funds also, which will invest 70 rupees after the 100 rupees in equity and 30 in debt, so that 30 will give you the stability right in your portfolio, and only 70% of your portfolio will be volatile. There are other schemes also available which are conservative hybrid schemes, which invest only 10% of 100 rupees in equity and 90% in debt. So they are much less volatile as compared to full-fledged equity funds. There are liquid funds also which invest for 3 months, 6 months. So if your time horizon is 3 months, 6 months, you need that money after 3 months or 6 months. 6 months you invest in liquid funds. You will get a slightly higher return as compared to if you would have kept that same money in a savings account. In savings account, you will get 3.5% interest. In liquid funds, you may get 4% interest or 4.5% interest with a better tax efficient way of investing. Okay. So if your time horizon is less than 3 years, please don't think about equities at all. So your answer is in your question only, that suppose if you would have bought something and after 1 month, the stock price has gone down by 25%. Okay. So what you should do? So first of all, if you have invested, you should have invested with a more than 3-year horizon. This is my first point to you. Second point is that if you have invested, you would have invested after doing due diligence, after doing adequate research. But the market is telling you maybe that your research may be inadequate. You may have done, half-baked research, and market is trying to tell you that the research that you have done is not completely correct. So it is a time for you to review your portfolio. whether the research that you did and you bought that stock, okay, was correct or not. That decision was correct. So after you do that due diligence review, if you come that maybe your decision was wrong, you may get out. You should book that, book the loss. You should not be, let me tell you, please don't be afraid of booking the loss. If you will make mistakes, then only you will learn. If you will not make mistakes, you will not learn. I have also made mistakes. Rakesh Jhunjhunwala has made a lot of mistakes. Even Warren Buffett has made a lot of mistakes. See, in Warren Buffett's portfolio also, in last March, when it is there on Google also, you can search. Last March, when the world was in lockdown, that time in Warren Buffett's portfolio also, he was holding Boeing, Boeing stock. Now, what does Boeing do? Boeing makes aeroplanes for everyone. So Indigo buys that planes, our SpiceJet buys that plane, Air India, and everyone knew that for next 6 years no one is going to travel. So the demand for aeroplanes is going to go down. So the Boeing stock price had fallen by 30%. But now that same Boeing stock has recovered again by 40%. And Warren Buffett is again making profit now. Why? Because simply he's sitting tight on that stock and he had that conviction that Boeing will come out of this, temporary problem which the world is facing. Okay. So if you have bought some stock and it is down by 20-25%, please review it. And after reviewing whatever you feel, take decision accordingly. Yeah. I think you are frozen. You are frozen like your stock price.
Yes, sir. Thank you, sir. And so one more question. Should one consider investing via FNO or should one stay with equity only?
Please repeat.
Should one consider investing via FNO or should one stay with equity only for a long term? Or should short term should one go for FNO also? That's a bit risky, but still FNO.
Yeah. So the first point is, if you want to invest in markets, using FNOs, you cannot invest. Using FNOs, you can only hedge your portfolio. Okay. See why FNO has been introduced in the world and India. FNO is not a tool for investing. For investing, you need to invest directly in equity shares. Okay. FNO is basically to hedge your portfolio. Suppose suppose you are a mutual fund or a big HNI portfolio, you have a portfolio of say 1 crore. Then you can hedge that portfolio by going short in FNO, by selling the shares, and so that suppose if market falls like market had fallen in March of 2020, right? So you will be hedging your portfolio against that black swan event. We talk in the market, see what had happened in March 2020 when market suddenly fell by 25%, Sensex had fallen by 25%, was actually a black swan event. This black swan event happens only once every 8 years or 10 years. So this COVID was actually a black swan event. Last black swan event which I can think of was the Lehman crisis which happened in 2008 when the market had fallen. So every 10 years you will come across these black swan events which we call. And let me be very categorical. It is very, very difficult, next to impossible, to predict black swan events. No one can predict black swan events. It will come suddenly as a shock, like a tsunami comes or an earthquake happens, and no one can predict. Okay. So that is why we are telling that if you are investing in equities, please invest for 5 years, 10 years. I invest personally in equity for keeping a minimum time period of 20 years at least. So I don't invest for 5 years also. I don't invest for 10 years also. I invest for a minimum of 20 years. Because I'm sure if you do any study, whether it is Nifty or Sensex or Dow Jones or Nasdaq, after 10 years, that that index has given positive returns. Even if you would have invested at the peak of the market, okay, you will still earn money. See, like the last peak was 41,000. If someone would have invested at 41,000 and then the market went down by 26,000, that investor was facing a loss of 26% from peak to the bottom. but now the index is at 50,000. So if you are a long-term investor, the index will definitely give positive returns. Even good stocks will give you positive returns. So if you are investing in FNO, only use FNO as an instrument for hedging the portfolio. FNO is never an instrument for investing, whether it is 1 month, 2 months, 3 months, or whatever. I hope I've answered your question, but let me be categorical. In my lifetime of 35 years, I have never touched FNO. And I hope I will never touch FNO also.
Good afternoon, sir. So this is Saurav Mutiramani. I just had a small question. Since you've been into markets from 3 decades, so you must have seen various market cycles. So my question was as to what should be the strategy while investing in a bull market like the current ones? Because if someone would have invested in HDFC Bank in March 2020, it was around 700 levels. Now the stock has doubled and it's trading at 1400. So one is hesitant in investing in during these levels. So what should be one's strategy?
Yeah. So very good question. See, you are correct. You are comparing today of HDFC Bank 1400 with HDFC Bank of 700 of last year. Okay. So you are comparing two price points within 1 year. Okay. But let me give you one perspective. See, my father, he's no more, but he had invested in HDFC Bank when HDFC Bank had come out with the IPO in 1994. Okay. So in 1994, I don't know if you remember, you may not be born also, but in 1994, HDFC Bank had debuted on NSE and BSE. It had come out with an IPO, and my father had applied in IPOs. That time IPO was not a fad like today. Nowadays IPO is a fad and everyone is trying to make quick money out of it. Okay, someone had raised a question on IPO also, which I had answered if you would have seen. So my father had invested and he got successful allotment of 500 shares at 10 rupees. So HDFC Bank had come out with IPO at 10 rupees. Okay. And, so after that, it became 100, 200, 500, 700, various price points we have seen over the years. Okay. And my father still held it in the demat account when he expired. Then from my father's demat account, it got transmitted. Sanjay Nunes covered transmission also. So that's why I'm trying to relate, so that it got transmitted from my father's account into my mother's account. Then my mother unfortunately expired few years back. And then those HDFC Bank shares got transmitted into my account. Okay. So I'm still holding those same 500 shares of HDFC Bank, which my father had invested in 1994. So our purchase price is 10 rupees. Okay. So it is immaterial for us whether the price is 1400 now or whether the price is 700 or what the price will be in future. Okay. Because we are not bothered with daily or yearly movements in stock prices. Okay. Now coming to your question that whether you should be investing at 1400 or not. Okay. Now, again, you are comparing the current market levels of 50,000. Okay. Now, current market levels of 50,000 we have never seen in our lifetime. At least in my 35 years of investing experience, I am seeing 35,000 for the first time. Okay. And markets will always surprise on the downside also, and markets will surprise on the upside also. Okay. So, 10 years back, if you would have asked me कि क्या index 50,000 हो जाएगा, I would have told you नहीं, मुझे नहीं पता. And no one can tell market क्या होगा. After 10 years, so we are in 2021. I cannot tell you that after 2025 market क्या होगा. I cannot tell you कि market 2030 में क्या होगा. Okay. But looking at the history, index, which is Sensex or Nifty, has given compounded annual growth returns of 15% or thereabouts. Okay. I will try to be more conservative because I'm 50 years old. So as I told you, according to the thumb rule, 100 minus 50 मतलब मैं तो खाली 50 रुपीज इक्विटी में इन्वेस्ट कर सकता हूँ और बाकी 50% तो मुझे डेट में रहना पड़ेगा. Like, but still 50 rupees तो मेरा equity में है ही. Okay. So being a conservative investor, I will not look at 15% returns, but I will look at a more, conservative returns of 12% per annum over a period of next 20 years, not 10 years. So suppose if you are buying now HDFC Bank at 1400 rupees, there are two things you need to keep in mind. Whether HDFC Bank will continue to remain such a big bank over the next 10 or 20 years. Okay, this is one part. What would be your answer to this?
Yes, I feel it will be the one of the largest private sector banks in the next 10 years.
Correct. Okay. So you have answered one question. Now, see, in the Sensex is the average, weighted average of the top 30 companies listed in the country. And this Sensex has got weightage across banking sector, IT, pharma. So now you tell me, after 10 years, will HDFC Bank remain in the Sensex or not?
I feel yes, it should, because if it will be one of the largest Indian banks, so it will be in the Sensex and in the banking index as well.
Okay. So you have answered two questions. One is that HDFC Bank will continue to remain one of the well-run, top-run private sector banks in the country over the next 10 years. Okay. Second point, you answered that HDFC Bank will remain most probably in the Sensex also. Okay. Now, if you are investing in HDFC Bank, which means you are investing in equity, right? If you are investing in equity, your time horizon should be minimum 5 years and above. Okay. So by investing in HDFC Bank equity, you are telling me that you will remain invested for at least 5 years, if possible for next 10 years also. Okay. And if we look at the history, and if Sensex has given returns of 15% annualized, and if you are a conservative investor like me, and if you will get 12% returns also out of HDFC Bank over the next 10 years, then you have answered your own question whether you should be investing in HDFC Bank or no. Okay.
Yes,
so coming to again your question and correlating with the previous question which someone asked. So suppose if you would have invested HDFC Bank at 1400 now, and we are again faced with a black swan event like last year, God forbid, it doesn't happen, and market goes down by 26%. So your HDFC Bank also will go down from 1400 to 1100 in 1 month. What will you do then now? Are you prepared? Are you prepared to take a downside risk of 30%?
Yes, sir.
For an upside of 400% over next 10 years?
Yes.
Are you ready to take the risk of 30% downside for earning a return of 400% over the next 10 years?
Yeah. I'll
So
take that as an opportunity to average it and maybe increase my returns.
So you are answering your own question.
Got it.
I am not advising you because I cannot advise you. I am not a SEBI registered advisor. So I cannot advise you whether you should invest in HDFC Bank or not. It is you as an investor who has to ask all these questions to yourself and then decide whether HDFC Bank is an appropriate investment stock for you or not. And what is your time horizon? And what is your objective of investing in HDFC Bank? These are the basic questions which you as investor, you need to ask yourself. No one can ask these questions to you. You have to ask yourself. And you have to take your own decision because it is your money. You are not investing my money. You are investing your hard-earned money to invest in HDFC Bank.
Correct, sir. Thank you so much, sir.
Yeah, any other questions, please? Anyone has any other questions, please? Go ahead.
Questions? I guess most of the questions you've answered in the chat box. So
Yes, ma'am. I think all the questions are answered and maybe we could take this ahead. I guess you're on mute.
I don't know, I have unmuted myself.
Yeah, see, someone, yeah, Yash Sureka wants to ask.
So just one last question. If I had to invest in a mutual fund, then what do I look in it for before choosing it for a long-term investment?
Yeah, very good question. See, as I told you, I had introduced you the concept of goal-based investing. Okay, so if your investment horizon is short-term, medium term, or long term. So if your investment horizon is short term, which is 1 year to 3 years, as I call it, less than 3 years is what I call it, then you should not be investing in equity mutual funds. You should be investing in debt mutual funds. Again, within debt also, there are a lot of categories. So there are something known as overnight funds. So if your investment horizon is say 1 month to 3 months, then you invest in overnight funds. Uh, they are very less volatile and will give you predictable returns over next 1 month to 3 months. There are something known as liquid funds, for which the time horizon would be somewhere around 3 months to 6 months. Okay, then you have something known as money market funds, which is for 6 months to a year's time. Then there are certain long-term debt funds also, which invest in long-term government securities. So those would be, for 5 years, 6 years duration government securities. So hypothetically, to tell you an example, say someone has got a time horizon of 5 years, but doesn't have the risk profile. That person is a very conservative investor and doesn't want to take the risk of investing in equities, doesn't have the stomach and the appetite to weather the volatility of stock markets. So they can go in for long-term debt funds, which are these government securities funds. Okay, which will not invest a single paisa in equity, and your full 100 rupees or 100% would be invested in government securities. They would give slightly better returns than long-term fixed deposits of banks. Okay, and so those can be opted at. If your time horizon is 3 to 5 years, you can consider hybrid funds. Now these hybrid funds invest in a mix of equity and debt. Okay, so say for example market was to go from 50,000 to 60,000. I'm just giving an example in the next 3 years. Okay, then if you had have invested in hybrid funds, your equity portfolio will perform handsomely and your debt will give the stability to the overall portfolio, and your overall portfolio will improve, the returns will improve over the next 3 years. That is because you are lucky and equity has performed well. Now I'll give you a other side of it. Suppose the market was to go down from 50,000 to say 45,000. Then your equity portion of the hybrid fund will perform badly because the index has gone way down. So the performance also will go down naturally. But the debt portion will give the stability because 30% has been invested in debt. So the debt will balance the downfall of equity, and overall you will get slightly balanced returns over next 3 years. Okay, if you are investing in equity mutual funds and your time horizon is 5 years and above, as I told you, then over 5 years we have seen, if you do the analysis of the markets over a cycle of 5 years, the index and Nifty comes out of the bear cycle also and performs reasonably well, and equity as a asset class will do well if the time horizon is 5 years and above. So based on your time horizon, you should be investing in debt mutual funds or hybrid funds or balanced funds or in equity funds. This is the first part, which is known as asset allocation. Okay, this is known as asset allocation. Now coming to your question, how do you analyze which scheme is good within that category? So overall today in India we have close to 4,500 schemes across various asset classes. So across debt mutual funds, across gold mutual funds, across exchange traded funds, ETFs, equity, hybrid funds. Okay. So there, how do you choose is, then you need to see the performance. What is the past performance of these schemes since inception? How these schemes have performed, and then there are various websites also available. Like you have valueresearch.com, you have Morningstar, which does research, even a reputed organization like CRISIL. CRISIL does ratings of mutual funds also, so you can look at those mutual fund ratings also. uh, and last but not the least, SEBI has got registered investment advisors who advise investors based on their goals, based on their risk appetite, based on your time horizon, based on your objectives, investment objectives, and then they advise suitable mutual funds to you. They will charge you a small fee, but I would suggest you pay that small fee and take a valuable advice from an advisor in case if you are not able to do this analysis yourself. If you are able to do the analysis yourself, please go ahead and do and choose the best mutual fund. See, Value Research, Morningstar come out with star ratings. So there is a rating given to each and every mutual fund scheme from 1 star to 5 stars. So 5 star is considered a good performance, 1 star is considered a poor performance. So a 4 star or a 5 star scheme typically would have a good performance track record over the long term, over the long term since inception of that particular scheme. So you can look at the mix of this, what I said, and then accordingly choose the right mutual fund scheme for yourself. This is not the end. Again, after 6 months and 1 year, please keep reviewing the mutual fund schemes in which you have invested. Same goes for stocks also. So if you would have invested in HDFC Bank at 1400 and the stock has appreciated and gone up to 1600, please review it. If you feel that HDFC Bank is still performing well, there is no problem at all, please remain invested like Warren Buffett. Please sit over HDFC Bank for the next 10 years, 20 years, 40 years, if you feel that it will do good. I am not advising HDFC Bank. I am just giving this as an example. Okay. So whichever stock that you choose, you do your due diligence, you invest, keep reviewing it. If you feel that it is the right investment you have done, if you have the conviction, please hold it. You will see that eighth wonder of compounding. Incidentally, I want to give a disclaimer here. Whichever stock names that I have taken during the course of my speech, those are only for example purpose. Please don't go ahead and buy those companies based on if I would have said something about it. This is the disclaimer, please.
Thank you so much, sir, for answering all the questions. And I'm damn sure the students are really happy with the today's session, and all the queries and answers were solved. On behalf of HR College, HSNC University, and BFM committee, I would like to thank our principal, our vice principal, for gracing the session. A special thanks to you, Mr. Yogesh sir and Mr. Sanjay sir, for such an enlightening session. A big shout out to Krishna Foundation for partnering with HR College and making this event a grand success. Some key takeaways from today's session can be we must start early and let compounding do the miracles for us. And we must at least save 30% and invest it as per our risk profile. And we must never put all our eggs in our basket and should expose to different asset classes as per our goals and always have a piece of equity in our portfolio. And the last one being, do not save what is left after spending, but spend what is left after saving. And I'm sure each and everyone present here must have realized the role of depositories and how crucial they are. So thanks a lot for joining in today. And we have a very interesting quiz competition lined up for you all tomorrow. And I hope to see you all in large numbers. Thanks for joining in. You've been a wonderful audience. Thank you, everyone. Thank you, Sanjay sir. Thank you, Yogesh ji. Thank you, Principal ma'am. Thank you, Vice Principal sir, and especially the whole BFM committee. And this wouldn't have been possible without you, ma'am. Thanks for guiding us.
Special thanks to Shweta madam for the coordination
Definitely.
and
Thankful to thank you for coming, Sanjay ji and Yogesh ji. Thank you so much for the enlightening session, and thanks to Naveen sir, and special thanks to Pooja ma'am for allowing us to take this session further. So thanks to everyone, and thank you to all the wonderful